traders, we have ourselves a potential inflection point happening here in the markets. Got to be paying attention. You know, the oil sell-off that we've had in the last 24 hours has potential to tip sentiment in the stock market into negative, and we're seeing that played out in the ASX quite nicely, in the DAX quite nicely. So far hasn't come across into the Dow Jones just yet. They're a little bit more resilient, the uptrend. But if that was to fold as well, then the selling pressure you're starting to see on the dollar yen could get a lot faster, a lot more intense. And the pound yen's already shown that it's leading the dollar yen at the moment. Euro yen is also under pressure. Now this sort of market reaction to oil selling off is not new, and it can definitely continue. So the buying of the euro yen, the buying of the dollar yen on dips, I suspect we should be a little bit more careful with this and look to see how US stocks go tonight, because this could turn into at these levels a bloodbath if there is any selling, because there is just relentless one-way action that's led to an overbought situation, and then selling's always quicker than buying. And you definitely have the excuse here with global growth being under a cloud, given oil prices being under pressure. Right now, that's the reaction function, right? That's how the markets sort of move. They look for excuse, and at these levels, you've got the excuse, so you just haven't had the price action to back that up just yet on the major, which is Dow Jones. But you're seeing there's been some easing in dollar yen throughout the day. Pound's just been relentlessly weak, and the euro yen's also, you know, struggled. So this is a little bounce that we've seen in the last 30 minutes. We'll see if that can hold, but you know, I would not be confident of holding. In fact, I've sold a little bit of Dow Jones, and I've got that short running on the ASX from Monday, and it's turning into quite a nice trade. Paid for a fair few of the losers that we've had so far this month, and it's behaving well. Now, in terms of closing it out, look, I've nearly got to the profit target in 2 days. I don't like having that level of extension. It's not like I'm not you know, negative here on the whole global markets as a whole, and Aussie dollar does have some relationship with Canadian dollar and oil. It's just there's no reason for me to not take that profit when I see it. For me, it's a little bit of just I want to take some profit because it's my first big win this month, and I just want to lock it in, and you know, hopefully we can build upon that. So which ways can you look to play? Well, dollar CAD's got some upside potential here, and you know, it's lagged a little bit, and it's been in a downtrend, so it's been stubborn in terms of going higher, and it's got a relationship with oil that's pretty close. And although it hasn't really reacted too aggressively to the top side yet, if we are to break this 113.33 level, then it could really go to the top side quite sharply, as the shorts have built up a fair bit in the downtrend. Yeah, and this would really open up the 134, 135 levels without really affecting too much. You know, the market it's always fairly choppy with the Canadian dollar, so you've got that reason to be looking for that reversal anyway. And you know, you've got the reason with oil breaking new lows for the year, and that to me is enough. Yeah, enough to see us going higher. All we probably need is a little bit more US dollar strength after we get some safe haven buying, and you're on your way. You've seen the Aussie dollar kind of crack a little to the downside. Nothing too crazy just yet. Everyone's still stubborn, it's holding. Same with the Kiwi, it's still stubborn, it's holding. But it's beginning to turn, yeah, and that's you got to pay attention to that. It's not. I don't think the buyers of the Aussie dollar on the dip here are pretty happy with the reasoning. You know, for us to get back down towards that 75.50, that's not the best reason, right? You know, stocks starting to roll over and oil under pressure. That's not what you want to see as an Aussie buyer, that's for sure. And one of the big legs of support for the Aussie is Euro Aussie, and Euro Aussie's turned a little, and so we can see that as a nice little way of expressing some Aussie weakness. You can pick your basic, your poison. You can buy Euro CAD as well. So Euro CAD's not a bad little trade to get involved in if you like that relationship it has with oil. It's better. It's a bit more pure than the Euro Aussie. I trade Aussie a lot more than I trade CAD, so I've been paying attention to the Euro Aussie. But yeah, exciting times. Finally, potentially some volatility on the horizon. Another way you can play this is long gold. Yeah, if volatility picks up, gold's at nice levels here for resumption of the uptrend. You've got a little bit of trendline support coming through at these levels too. So, you know, if it's going to find support anywhere, then it's probably here in the next $5–10. And you know, the relationship with commodities and oil is not that strong. With gold, if it's selling off, last time oil smashed lower, then gold did go higher, just because it creates volatility and it's a safe haven. People flood into gold when stocks get rocked. So yeah, you know, keep an eye on this as it develops. This is developing very bearishly, the market, and it has a lot of room to move if it wants to go to the downside. Now, has there been false starts in the past? Of course there have. You know, we've had false starts so many times that you know, you have to be cautious on the risk-off sort of trade. But you know, this one is sort of set up quite nicely, and it's in a week where there isn't much data, and you got that catalyst with the oil. So it's a stronger argument to me than most of the times that we've had the reason to sell stocks or the Nasdaq just because it's too high. You know, and that's just not a good reason. Now we've got a reason. Let's have a look. Let's have a look. Yeah, probably my camera was out of focus. Maybe it should be better now. So today we do have State of Origin though, so that should be interesting. I will be watching that, so stream won't go on forever, that's for sure. Let's quickly look at one of the pairs which is also approaching key levels. The Euro Pound is back above 88 and is approaching 88.50. Now 88.50 is a bit of a level, and it's going to get some excitement up there, that's for sure. If we break that, then you can talk about 90. If it doesn't, if it holds, then we can talk about selling again. And you know, to me, the pound's got a fair bit more potential downside here towards that 125, 124 level. So if it's going to break anytime, it's going to break here, and then it's really hard to stop that, right? It's getting hit on every angle. It's getting hit on the majors, getting hit on pound yen, it's getting hit on even pound Aussie and pound Kiwi are making lows. It's hard to be buying that pair at the moment, the pound, if it gets anything, and so it's not yet time to be brave and enter the market, you know, as in anticipation of this everything being okay. You still got a little bit more room here to the downside, and price action suggests we are going lower too. So at this particular time we go to 88.50, I won't be selling. Yeah, doesn't mean that I'm not looking for opportunities to sell Euro Pound, it's just not the right time, and you've got to let the market run when it's moving here. Pound yen did hold first time on the 140 level. It's don't think it's going to hold much longer. Yeah, no, we'll see. If it holds, that's great. We can talk about it tomorrow. But if it breaks, you know, that's not a huge event in terms of the market. Then we'll be targeting the lows from the previous sell-off, and that's pretty easy to see that getting to those levels. How we get there? Dollar yen back to 110, and then pound towards 125 would definitely get us to fresh lows in the pound yen. Now dollar yen at 110, a lot of clients have been asking me today, we're going to buy it at 110. I think it's worth a look. It's definitely worth a look at 110. Same as the euro is worth a look at 110 as well. If we get down there and it wants to sell off back towards those levels, I've got that pending limit order for the last 3 weeks at 110.50, and I'm going to keep it there. I think the euro story is a good story. The tapering story, that is. So, you know, range trading probably is the outlook for the euro, and we're going to try to etch out that bottom end of the range at the moment. And if it's here, that's fine. We just missed the entry. If it's a little bit lower, it makes a bit more sense to me that 110 would be the lower end of a range here, 110 to 114ish in coming months. And so what's the combination of these two? Yeah, what's the combination of dollar yen and the euro USD, both having sort of big levels at 110s? The euro yen is that combination, and that puts us back at 122 something. If we get both of them moving towards 110, and that would be a pretty nice level to start sniffing around for longs. If the sell-off that causes those moves to happen. If you're, dollar yen getting to 110 probably requires stock markets in the US to sell off. If it's just a correction, that's great, and we can look to buy the dip. If it gets more serious, we have to be a little more careful about buying that dip at 110, because 110 is sort of an imaginary number we put out there as traders, not really anything. And if there's 3 days of selling and day one we're at 110, the 2 extra days of selling are going to put us at 109, 108 something. Okay. Alright. So we just closed out our Aussie 200 trade. Baker. We just closed it out, mate. I'll update the trade idea a little bit later. We're looking at 2 new trades: Euro CAD, Euro Aussie long, and one way of playing that, I suppose, is just to be dollar CAD long. And I think I'll do the dollar CAD with us on stream right now. A little bit like not the best level to be entering, but I can't pick too much levels. I'm just going to put my stop 50 points away. That's nothing crazy here. And I'll put my take profit probably around 140, 134, 50. Okay. 40. Maybe just a little bit below that. Okay. Now this is just the ways that dollar CAD goes up here. It's not a huge trade. I'm not looking for the world to cave in for Canada. I'm just looking for a reversal of the last couple of months reaction, and with oil and US dollar strength, risk off being the catalyst. So CAD yen selling, Euro CAD buying. You can pick your way to do it though. Euro Aussie makes sense too, and so does Euro CAD. Nothing crazy here. If oil rebounds, then you probably get stopped out, right? That's just the way it is. Because Canada, Kiwi, and Aussie dollar do have buyers around, and those buyers are being tested right now, but so far they're holding. So far they're holding. But we don't make money by trying to not anticipate the next move, that's for sure. You can actually go across and to sell a little bit of the Dow Jones if you like, just on straight up the potential here for the market to sell off. It to me makes sense, and the potential downside is so big that the risk reward is there. Is the price action there yet? Not really. But is the risk reward there? Yeah, pretty much. You're looking for 200, 300 point move without a sweat, and stop of 100 points if you're going to sell up there. The other trade I might do as well, though, just to get a little bit more exposure for this particular event, is gold. I like the way it's sort of paused now to think about what to do next, and with stocks starting to roll over, I suspect that the next move is higher. So nothing crazy here. Stop at 38, and fairly open take profit, probably back towards 1260 at least. 1259 to begin with. You can go a bit bigger than that. You can go a bit bigger than that. 2 days of selling in the stock market will definitely get us back up to these levels. Because yesterday doesn't count, right? I mean, the market just paused. The gold, all that did was just stop the gold. Yeah, CRISPR, yeah, that would be. What are we talking about? 130? You mean? You're talking about the 133 level, I think. CRISPR 133, yeah, it'd be for breaks and then comes back down, buy it off that. That's a better way to do it. But I've only got 20 minutes, mate. 20-30 minutes. I got to trade it in the time I'm in. So what I would be keeping an eye on as a trader today is the Dow Jones, if we start to see a bit heavy selling at the start of the session, and also the dollar yen if we break 111. That would be sort of signaling that we do have a bit more risk off, and then you should see any sort of rally in Aussie and Canadian dollar. Any bounces get sold on the Kiwi and the Aussie, and then dollar CAD be brought back up. The big thing coming up on the horizon tomorrow morning is the RBNZ. Now, we've talked at length about that in the last couple of days. We'll talk about it one more time. Because the Kiwi is actually a bit more resilient than the others at the moment. So you can see Aussie Kiwi now down near the lows. You see Kiwi still finding support on dips. but it is starting to show some lower highs on the 4 hour, and it's a little bit more mixed, yeah, about what's going to happen tomorrow. I still suspect the RBNZ jawboning will be less effective this time than in previous times, but it still might be good for 50 points to the downside. It still might be good for 71.60, and then you know, take out some of those trailing stops, and then the buyers can resume the upside, as long as the whole market doesn't get hijacked by some sort of risk-off move. If the market gets hijacked by the risk-off move, doesn't matter about technicals, because the big game in town is sell everything. Yeah, everything that's risk-related got yield, and that can wreck the best of ideas, the best of plans. Now, if they are going a little bit more neutral, or acknowledge the dairy prices, which would be a mistake probably at these levels if the RBNZ came across that way, and the Kiwi was to shoot higher, that does create pretty clear selling in the Aussie Kiwi. Whether the Kiwi can get to 74, 75 probably depends on the amount of risk off coming through, because Euro Kiwi and Pound Kiwi and Kiwi Yen, they're due for some sort of sell-off if there is a stock market move. So keep that in the back of your mind, that the Kiwi, while it might respond sharply tomorrow morning, could fail, put even a bigger double top in at 73, and fall back with the others if the stocks are under pressure and the market wants to play that for a 2 or 3 day event correction, a sharp correction, which would be about time. I mean, we've been waiting long time for some volatility in the stock market. You could watch the VIX and see if the VIX spikes higher. If the VIX spikes higher, that's a good little sign that something's up. But VIX is really quiet right now, a little sleepy, a little bit sleepy. Gold will let you know. Gold will let you know for sure too. Let's have a little look at the latest this morning from Brett Donnelly, HSBC. I like this report. It's just, I mean, he's not getting everything right at the moment, but he's got the right idea, I believe, and I like the way he writes about it. Get my face out of this.
Good morning, folks. It is Wednesday morning.
Alrighty. So yeah, the 5-3 vote from the Bank of England has not really led to the sort of price action I was expecting. So you saw that trade we did last week or early this week get stopped out as there was no follow through, and now everyone's just talking downside, and the price action is just getting terrible, and there's very little support until we get to that 125-ish level. Heavy selling being reported from most of the banks coming through. I suppose it's just, you got to watch it, right? Stop stepping in front of the train. The pound wants to fall, pound wants to fall. Pound yen, I mean, that's so aggressive as well, just definitely helps it. And we've got a fair bit of room there to move lower. In terms of the crude charts as well, yeah, it is quite easy to see us going to 40. Let me find the crude chart. It is quite easy to see us going to 40 now. It's I mean, you could have a little bit of a reversal just broadly, right? But I think 40s is on the cards at some point coming up. It's it's strange. It was selling without really major catalysts as well. That's pretty dangerous sort of selling. But you never know. You never know. Oil is really hard to sort of predict. I don't touch it. It's a widow maker. Makes Kiwi trading look easy. Just because the reversals are so large, and the intraday reversals are so large, you gotta trade a lot smaller with stops a lot bigger. And it's so much movement already, right? So you're selling with momentum, selling with that feeling, but have you missed the boat? Have you missed the easy trading? Is it now going to get much more choppy, much more difficult? So yeah, we'll see how it develops. But we're playing it by another way, which is dollar CAD. Now dollar CAD can also go up if stock markets fall. So that's it. Alright, so he's reduced his New Zealand dollar exposure. One, because everyone was leaning hawkish into RBNZ last month, that's true. And Wheeler came in dovish. Now everyone's leading dovish, so he's worried that it's going to come out hawkish. Yeah, I mean, look, all the analysts are expecting dovish, right? And the retail market's heavily short, so you know he's got a point there. And his friend Mark Stevens from the HSB Rates Trading Sydney sent me another chart showing iron ore milk price ratio, and this is true. Usually does show the Aussie Kiwi direction a little bit more. And so while you got that interest rate differential, it's not really like it has to snap back to those interest rates. They're longer term sort of effect. Right now you've got the milk prices in the headlines, and you've got iron ore in the headlines. So that's really, I think, what's driving most of that sell on rally on the Aussie Kiwi. And he's targeting 124 on the pound, acknowledging 126.40 is a big support. Okay. Don't think I think this was written before that got smashed. Yeah, must have been written last night. Okay. So he's still on the right trade though. He's on the downside. See if there's an EMR here. Yes, good. So we're going to read the Deutsche Bank EMR. This is early morning read, and it's another nice one to just touch and check in on, just in case you missed something, right? Oil seems to be one of the major market movers yesterday. This means it's now fallen a little over 20% from highs back in February. Therefore slipping into definition of a bear market rather than one specific catalyst. The move seems to be just an extension of the slide. Now the market's questioning the impact of OPEC-led cuts and also a reinvigorated shale market. Risk assets were hit hard, yeah, but not really. Not really. Come on. Biggest decline since May the 17th is 0.67. That's ridiculous. It's nothing. But EMs did start to sell, and US 10 years, which are important for dollar yen, remember, you know, bonds get bought when stocks fall, and that doesn't help dollar yen. There's another leg why. China news. We don't trade China shares, so I'm not going to go into that, but that's pretty good for them. Helps you get exposure to Chinese. Outside investors get exposure there. This is another reason why the pound's under pressure. There's no deal, and talks have been talked to be stalling a little bit between the Conservatives and the DUP. And you know what, I reckon they're stalling on Brexit plans and maybe some of the social issues like gay marriage and things. Yeah, and so there was reports in a couple of newspapers about the DUP threatening to walk away. That would be really bad. That would be really bad for the pound. The pound needs that like a bullet in the head right now. And obviously Carney was also very negative yesterday. But we talked about that as it was before yesterday's stream. The big Fed Dove speaking on Thursday night. Powell's a bit more of a dove, and he's speaking Thursday night midnight, so my time. So Thursday, just at the open of the US session, you're going to see one of the dubs speak. Perhaps he can also voice his concern about inflation or not. Alright, then we've got 6 pages of disclaimers. Do not show this report in a stream. Do not give this to retail FX traders. Alright. So yeah, I think you got my view here. I'm gearing up. I'm positioning myself for gold higher, stocks down, risk off sort of trading. I pushed my another trade through on the dollar CAD. That's where I see the easiest way to express oil weakness, and for that to continue, you know, how to take advantage of that, because CAD hasn't really moved just yet enough to just, you know, to fall in line with the potential the effects of having that low oil price if it remains lower for a little bit longer. And that's the way I'm going to be trying to take advantage of this nervousness. I think gold is pretty solid in this situation. I mean, gold could have rallied for no reason anyway at these levels, so now you've got that back end. And you know, risk off definitely trumps US dollar strength from Fed when it comes to gold anyway. Alright guys, I'm off to watch the State of Origin. So that's a big game that we have here in Australia. It's like the Super Bowl in rugby world, and it's a bit of fun. So but I will be keeping an eye on some of these developments. I think the US session tonight's pretty important to be watching, and I think it's way too early to try and pick the bottoms in any of these yen crosses, so let's not get involved in that. Let's save our ammo for some nice levels. 122 on the euro yen would be fantastic. Alright guys, trade safe.